Good morning, Eduardo. How are you today?
I'm okay, Damian. How are you?
Good. Welcome, everyone, to Mex Moves, our weekly podcast on Mexico business and finance of interest to the international listener. I wanted to start by saying thank you to Dennis Musa, who commented that he couldn't hear me very well on the podcast a few weeks back and went to see a doctor. And he told me that I had a little cyst on my vocal cords, and he took it out, and I think I can now speak much better. So podcasting is good for your health.
I guess so. The benefits of audio recording, I guess.
So what have you seen this week?
Well, I used a little bit of math to bring up the best performers in the Mexican stock exchange during the first quarter of this year, and there are a few interesting companies that did well, leading with Peñoles. Obviously, as Trump has generated a lot of uncertainty, metal prices have gone up, and I think that has probably benefited Peñoles, which saw an increase in its share price by 41.5%, followed by Gentera, the micro lending company that showed an increase of 30.7%. And those two were followed by bottling companies, Arca Continental and Coca-Cola FEMSA. Both did well, 23.8 and 16.2%. All these are numbers coming out of the InfoCell platform and the Axis Negocios newsletter. And last but not least, Kimberly-Clark with a 14% increase in its share price. So as you can see, Damian, it's a mixed. I mean, the only obvious one is Peñoles because of metal prices, but the other three are consumer products. So despite the fact that we've seen the decline in consumer confidence, it seems like consumption in Mexico hasn't suffered as much yet. And maybe lower interest rates could also be a part of people feeling more confident in buying, putting a little bit more debt on their credit cards. Don't know, but it's interesting that 3 out of the 5 top companies in the stock market in the first quarter of this year were consumer product companies.
Well, we're going to have some questions for Gordon Lee in a moment. Gordon Lee is the Mexico equity analyst at BTG Pactual and an expert on that. And we'll ask him why Mexico has outperformed the US when Mexico seems to be much more vulnerable to US tariffs, which are meant to, in fact, be good for the US, according to Trump. And Mexico, I think the overall market was up 6.5% in the first quarter. So it's shaken off the tariff threat. Maybe it was all discounted. Maybe people don't think the tariffs will last very long. And clearly consumption is for consumer staples like Coca-Cola, which is obviously Coff's and Arca's main product, has been relatively robust. And both Arca and Coff make a lot of their earnings outside Mexico. Arca has a big business in the US, which is doing really well. Coff has a big business in South America, which is also doing well. Whereas consumer cyclical and consumer retail, which is a bit more sensitive to changes in consumer sentiment, hasn't done so well. And you've seen a big decline in ANTAD sales growth, but let's keep those questions and that analysis for Gordon's interview.
Sounds good. Let's see what he says.
So from my side, a few things. Yesterday, the finance ministry announced its so-called criterios, its budget guidelines for this year and next, and also its economic growth forecast. I think the good news is that the so-called fiscal consolidation or fiscal austerity is continuing under Sheinbaum. So they're sticking to their target of 3.9 to 4% of GDP, which is where it was before. And next year, they're looking at a deficit of 3.2 to 3.5%. There'll be further fiscal contraction if that happens. And debt to GDP is expected to go up a little bit to 52.3% this year, but from 51.4 last year. But it's still very low compared to most other countries that analysts look at. So Mexico is quite under-leveraged. I think the big concern people have is that the assumptions on which these budget numbers are predicated are quite rosy. So they're looking at a GDP growth of 1.9%, whereas the central bank itself is at 0.6 for this year, and most analysts like JP Morgan and Bank of America are at 0%, as we talked about last week. So that might be a little bit optimistic, but nonetheless, the variables that the government controls, which is largely the primary, the primary fiscal balance, look as if they're quite conservative, and the overall debt GDP looks quite good.
As I was driving here, I was able to listen to the morning news briefing by Claudia Sheinbaum. She's obviously, as a leader of a nation, she has to be very optimistic and even more rosy than his own finance minister's numbers. But she was giving a number that I have to check it out about how much revenue the government is being able to collect. She didn't specify whether it's tax revenue or other revenues, but she talked about a 19% growth in the first quarter. So I guess if that's the case, the fiscal consolidation could be on target, as it would be very healthy for Mexico to reach the 4% deficit in GDP terms for this year and maybe even lower for next, which is, I think, what would probably save or may not save Mexico from a downgrade from the rating agencies either this year or early next year.
We hope so, although JP Morgan is expecting a downgrade within 6 months, partly because of the weakening growth variable. So moving on to corporate news, Eduardo, this week we saw Bineo, the much touted fintech of Banorte, say or be reported that it stopped taking new clients and is going through a big restructuring.
Correct.
Whatever that exactly means. By some accounts, Banorte spent about $100 million setting up Bineo, and then lost another $50 million last year. That's down 150, and I've heard from other people, close to the situation that the losses may in fact be north of that. So it's a pretty big egg in the face for Banorte. What I understand is that the technology never worked very well. It wasn't, despite spending all this money. And because the technology didn't work very well, they weren't very efficient at processing new customers. And if you're very efficient at processing new customers, there's not much point being a fintech. You may as well.
That's what the fintechs bring to the game, I guess.
So I think there's also a challenge at an incumbent bank trying to be a fintech, because it's difficult for them with a brand or semi-brand that the parent has to offer kind of disruptive yields on deposits, because that could take money away from their incumbent bank. So Banorte didn't join in this sort of deposit race that Klar and Story and Nu had offering yields at one point 15% or so. So they didn't really have the yields. And then on the credit side, they never really got a credit product together. And on the credit card side, Banorte, it's mostly focused on RappiCard, the joint venture with Rappi, and that actually, to the credit of Banorte, I understand that RappiCard is now break even and it's working out reasonably well. So maybe the restructuring will involve some kind of integration between Bineo and RappiCard. Maybe Bineo will be candled together and just put into Banorte. We'll see, but it's definitely been a big waste of money, and I think a lesson to be learned with other banks like Santander is about to launch its fintech in Mexico, Open Bank. And let's hope for them and the people who work there that it's more successful than Banorte seems to be in the process of being wound down.
These are the two large banks that have tried to set up a fintech separately from their core business, right? Santander and Banorte. Although Banamex did an exercise many, many years ago that they set up a new bank that was targeted for young people, that I don't think it went anywhere.
Yeah, but it wasn't, as far as I remember,
it wasn't
a separate banking license, with a fully separate sort of P&L and legal entity.
Okay.
It was more of a kind of brand within Banamex.
That's right.
There have been successes in Colombia, Argentina, of incumbent banks setting up fintechs, but it happened a while ago when the other incumbent banks perhaps didn't have such developed digital platforms. So I think launching a digital platform in 2025 or 2024 seems late
in the game.
When basically all the incumbent banks, starting off obviously with BBVA, have great digital products.
Correct.
So what exactly are you giving people that you're not getting
already from your?
So the fintechs have an answer, which is great deposit yields, no fees on the credit cards, a great UX, but Bineo kind of was slightly stuck in the middle.
Correct.
Another interesting corporate news was Alfa's kind of 5-year, believe it or not, value unlocking exercise, which they first launched, I think, in 2020, is now nearing its end. In April, shareholders in Alfa are going to receive shares in the holding company of Alpec. And when that happens, Alfa will become Sigma. And that follows a similar process with Numac, the automobile parts company, having been spun off and Axtel spun off. This is expected to happen, I think, on April the 7th. It's been a very long long exercise, longer, I think, than anyone expected at the time, but successful. GBM says that the so-called conglomerate discount, which will go away altogether once this happens, is now less than 5% because there isn't a conglomerate, or won't be a conglomerate anymore. So it's been a successful sort of exercise. And in addition to that discount going away, it will enable each company to be sort of self-sustaining, totally targeted on its own business, and top management won't be distracted by having to run multiple very different businesses from food to auto parts to telecommunications to petrochemicals. There wasn't a lot of logic between the different businesses, and each of the businesses, the possible exception of Axtel, has the size to raise money on its own, has the size to compete on its own. Maybe it made sense for them to be part of a conglomerate at the beginning, but now I think Alfa board took absolutely the right decision in breaking up the company, and maybe that will be a message to other conglomerates to do something similar. Hopefully it won't take them quite as long.
Yeah, it's a process that's been on the making for quite a while, and investors also rather invest in specific companies than in a conglomerate. I think the advantages of the conglomerate by diversification didn't materialize as much as investors had expected, and now they can decide whether they want petrochemicals, auto parts, food, whatever. It's a much more simpler investment proposition, I guess.
And then we had the WalMex day last week, Walmart de Mexico, which we've talked about in previous podcasts. I think the big news there was that they upped their guidance to 1,500 stores, their 5-year opening guidance, mostly Bodega Aurrera, from 1,000 previously. Their capex, I think, for this year is going to be about $2 billion, 42 billion pesos, spent between new stores, remodelation, logistics, 2 big distribution centers in Bajío, Tlaxcala, and then in tech and commerce. So interesting that they announced a $6 billion investment in Sheinbaum's Mañanera in the morning press conference, and then the same day they announced a $2 billion capex. And it seems that when in front of the president, operating expenses suddenly became capital investment. To get that number up to 6 and be the biggest investment of all the different investments that companies have made. But they did, announce very clearly in their investor day what the actual capex was and not the Sheinbaum PR capex was. And anyone who follows WalMex was very aware that it wasn't, in fact, $6 billion as traditionally understood capex. They also talked a little bit about Cashi, their fintech. It's, as far as we can what they've said, they're not planning to be a bank, unlike Oxxo, unlike Mercado Pago, two other big retailers. And they're going, but they are building out Cashi. They're very excited about remittances, receiving more remittances, and then having that money spent in Walmart stores. Cashi has recently become cash out, so you can use it outside the WalMex system and use your discounts that you get from shopping at WalMex outside WalMex. So there's a plan to continue to grow Cashi and have basically, as I understand it, a marketplace for loans. So Walmart won't be putting its own balance sheet to work to give credit, but we're making its platform available to SOFOMs and other credit providers that want to take the risk, and presumably Walmart will take a cut of those loans. So that's their model. It's going to be slightly different, obviously, to Mercado Pago, which is using its balance sheet for its credit product, and obviously banks and SOFOMs, which by definition use their balance sheet. We also, in your old publication, Eduardo, had an interview with Carlos Slim, who opened up a bit on his succession. He mentioned that he has, of his 23 grandchildren, they get a 3% stake in the controlling company when they get to 18, called Control Empresarial de Capitales, as a sort of graduation present, adulthood present. Now, I sort of wondered about if he has 23 of these, most of them, if not all of them, are now over 18 because he's 85. That means his grandchildren own 69% of this holding company, which doesn't seem to make sense, because in the same interview, he said that when he dies, he will pass on his business interests to his children in proportion to the number of children that they have, which creates a big incentive
to have more kids.
Have more kids might be one of the most profitable things you could ever do, is give Carlos Slim a grandchild.
They're all getting up there, so I don't know if they want to have more kids than kids. But it's an interesting proposition.
And he talked, I recommend the full interview in Bloomberg, but he talked a bit about, his kind of pivot and interest in energy. And the other thing that surprised me was how positive he was about Trump. Now, a quote from the interview, he said, "What's good about President Trump, he knows what's happening in the world." Now, I mean, there's several possibilities there. One, Slim believes that, and that Trump is, on balance, a good thing for the United States and the world. The other is he doesn't really believe it, but is trying to open up an avenue of communication with Trump, like a lot of businessmen are doing. We've seen it with Bezos, with Zuckerberg and others, by flattering him.
Very much so.
But I was a bit disappointed that he didn't take the opportunity in the interview to say something about how tariffs would be very damaging to the U.S. as well as obviously to Mexico, and that the U.S. would benefit, as it has done, from integration with Mexico, especially vis-a-vis China. But he clearly decided that wasn't the moment to talk about those things. He also said nice things about Sheinbaum. He said he talks to her every few months, and she understands the need for private investment. So that was, I thought, of interest. And then we got this month, obviously, April is the month, and March is where a lot of companies produce their annual reports, have their annual meetings, and announce their new board members. And we got an interesting one with Trellawi, the retailer that has a tremendous rivalry with Walmart, going back a rivalry in the marketplace, but also the Confessi investigation, as I understand it, into Walmart was inspired by complaints by Trellawi. So I think it's more than just a traditional retail rivalry. They've appointed to their board Scott Rank, who was the former CEO of Walmart. Mexico. So they have on their board someone who worked for a time, running Walmart Mexico. So that rivalry is probably going to
just intensify
even more.
Let me just make a little comment on Slim on what you said about Slim talking about Trump. I've never heard Carlos Slim, in all the years that I've followed him, make any criticism of people in leadership roles. So I'm not surprised he didn't make any negative comments on Trump's tariff proposals. We all know that it's not good for anyone. Well, we all, with the exception of Trump and Pete Navarro probably. But it's the way he operates, I think, in trying to be positive when he deals with authorities. So even in the U.S., I've been very surprised, more there than in Mexico, that few chieftains of industry have not come up and be more aggressive in their stand against what Trump is trying to do. I'm very surprised that no one is willing to challenge his president's take on tariffs, and his believes that this will bring manufacturing back to America, that it will not create any inflation. He will be proven wrong, I'm afraid, if what he announces is as harsh as we have heard so far, although there are some possibilities that he won't be doing it as high tariffs as we had expected, and that he might not be there forever. So we'll have to wait and see.
Let's hope so. So it's a real pleasure to have with us today Gordon Lee. Gordon is a partner at the Latin American investment bank, BTG Pactual, largest investment bank in Latin America, in fact, by some way. Gordon is head of Mexico research, Mexico strategist. He's been covering Mexican stocks, I think, for over 30 years now. And I say that with a little bit of authority because it so happens Gordon and I started working together on the same day, Baring Securities, in mid-1994, 31 years ago. It was my first job in finance, and I think it was your first job in finance. And then we worked together then, and then we came back together at UBS, where we worked together for almost, how many years was it? 8 years. So anyway, there's probably no one that I know, at least, that's been covering so consistently and thoroughly like Mexican stocks on Wall Street than Gordon. Despite his name, he's actually Mexican with Scottish father,
Scottish parents,
and Scottish mother. So welcome, Gordon. Thank you for joining us. It's a real privilege and pleasure to have you here.
Thank you for the invitation.
So, Mexico's in the middle of the storm. Today, as we're recording this, it's Liberation Day. We're shortly going to hear what tariffs Mexico and the rest of the world are going to face. And we already know about the 25% tariffs on cars and car parts and on steel. Yet the Mexican stock market is doing reasonably well. I think it's up first quarter over 6%. How do you explain that?
And that's 6% in pesos. In dollars, it's, I think around 10% now, or maybe a little bit less after this week. And I think part of it was Mexico had a significant adjustment in the second half of last year, right, following the Mexican election, which was a bit of a shock to markets. I don't think people weren't surprised by Sheinbaum winning, but obviously the outcome in Congress and what that meant for the subsequent legislative agenda. So I think part of it is that there had been a pretty significant adjustment leading up to it, and as a result of that, valuations I think were. I mean, it depends on how you look at it. You could argue that if you just look at a straight PE, is the cheapest they've been in 20 years. If you look at it adjusted, I like to look at what I would call the implied equity risk premium, right? Sort of adjusting for long-term yields. It was cheap. It was cheaper than it had been for a while. So I think part of it was valuations, but I also think I think Mexico's outperformance is probably more to do with the U.S.'s underperformance, right? Which I think is reflected in sort of outperformance of much of the world ex the U.S., right? Including Europe, right? European markets are up double digits. Other emerging markets, Brazil's up almost 15%, right? So I think it's more, for the first time in many, many years, at least for now, the rest of the world actually outperforming the U.S., right? And that, more than necessarily something I think is particular to Mexico.
And in this context, the majority of the analysts are expecting close to 0% growth in Mexico. Obviously, a slowdown in the US that's partly explaining that. They're also expecting declining interest rates, currently at 9, maybe declining to 8 or even lower than that. What kind of stocks or sectors do you think will do particularly well, and which ones might not do so well?
Yeah, I mean, I think, one thing that's interesting is even though you're right, if you look at GDP expectations, say consensus is, slightly north of 0 for this year, not much better next year either, right? Around 1%, 1 to 1.5%. If you look at most estimates, the interesting thing is if you look at earnings expectations for the market, consensus still has Mexico growing low double digits, 10 to 12% this year and something similar next year, which I think says a lot about the sort of resiliency of Mexico Inc. I remember when I studied economics and I took classes in finance, obviously these classes are always given through the lens of the US, and you were always told the market is the economy, right? The market is the reflection of the economy. I think that's not really true in Mexico. I think it's probably not true in many places, but in Mexico in particular, I would say, listed Mexican companies are probably in the top quartile or decile, right? In terms of sort of the quality of the companies. So I think that to a certain degree maybe explains why Mexican earnings have historically been not that correlated to GDP. The other point I think it's important to make is now over a third of Mexico's operating earnings is actually earned outside of Mexico, including half of that in the US. Which is interesting, right? Because it almost creates sort of an internal hedging mechanism, which is when Mexico's doing poorly, and that's typically reflected in a weak currency, that's actually good for the non-Mexican peso portion of earnings for Mexico Inc. So I think that gives it a little bit of a defensiveness. But the other thing that's I think is very important is that Mexico Inc. doesn't really live in all of Mexico, right? Mexico Inc., if you look at where earnings are generated, is really largely from Mexico City to the north. And that is a different economy, right? And if you look at Mexico as a whole, probably the product that I think we may have invented at UBS, which is a Mexico 5 SIM, right? The Mexico 5 stock ideas for the month, which is, I always have to make the disclosure that this is not a monthly portfolio. It's not a portfolio intended for 1 month of performance. It's a long-term portfolio that's updated once monthly. If you look at the way we've sort of positioned ourselves in that portfolio, I would say really since the Mexican election in June has been to be more on the defensive side, right? So our portfolio is not built to really sort of outperform in a buoyant market. And even though, as I mentioned earlier, valuations are attractive, and I think if we were to have another conversation like this one 3 years from now, we would probably look in the mirror and say that was, March, April of 2025 was probably a good entry point for Mexican equities. My sense is that there's enough sort of uncertainty ahead that one, there's no rush to buy, and two, there may be better entry points down the road as well. So if you look at our portfolio today, it's 5 stocks, as I mentioned. We've got Arca, Continental, the Coke bottler. I think there's nothing more defensive in Mexico than drinking Coca-Cola. Exactly.
The stock is not defensive, it just goes up.
That's true. That's true. But so does Coca-Cola consumption in Mexico just goes up, whatever the macro scenario. We've got FEMSA, which we sort of added recently. I think they finally gave a bit more clarity in terms of their sort of capital allocation strategy going forward, sharing more returns with shareholders. We have GAP, the airport group. We've got Fibra Uno, That's probably the most controversial of the five, and we can talk about that if you like. And then the last one that we have is Gentera. It's a pretty relatively defensive portfolio. I don't think there's that many cyclicals there. If let's say Liberation Day ends up being a lot better than feared, and Mexico were to rally significantly on the back of that, that's probably not the type of portfolio that would outperform that environment. But I think for an environment that, in my view, is likely to be choppy for some time, that's probably how we would position ourselves.
Well, congrats, because Arca, Gentera, and FEMSA have been three of the best performing stocks over the last 3 and 6 months in Mexico.
Thankfully, the portfolio, it's obviously a paper portfolio. I'm sure that the minute that I actually started investing, it would perform very, very poorly. But it's done well. The SIM actually, it's outperforming Mexico by about 600 basis points so far year to date. And actually, a little bit of a self-commercial here, but it's actually outperformed Mexico every year since 2012, which was when I sort of reintroduced it. Again, I'm sure that the minute that I actually invested money, it would start underperforming just as systematically as it's outperformed since we started it. But it's actually done reasonably well. And I think one of the lessons that I've learned from that is two. One is, I think in a market like Mexico, a concentrated portfolio is the way to go. And I evenly weight them. So each of these stocks has 20% weighting. I don't know when you did it, if you sort of adjusted the weights as well, but I've just decided to go 20% weight for all. And the other thing that I think actually helps its performance is that once I update it, I can't touch it for a month, right? I'm sure that if I had the opportunity of touching it, I would bungle it, right? But I think sort of it forces you to stick to your views. And I think it maybe forces you to be more thoughtful about the views as well. But I think the concentration and not fidgeting too much with it actually has helped the performance.
Gordon, and what would be the ideal portfolio if the more benign scenario takes place? Yes, if the Liberation Day is less Liberation Day than we want. Or more temporary, right. Exactly.
Look, I think what I've told investors is that the way that I think I would signal through my portfolio that it's now it's time to buy Mexico, I would add a bank, and not a bank like Gentera, right? Gentera sort of not very cyclical. It's not very sort of levered to the economy, but I would add a bank, and that bank would probably be Banorte, right? We were lucky not to have a bank after the Mexican election, not because we thought that would be the outcome of the election, but simply because I was getting a little bit concerned about disruption in the sector, sort of the aggressiveness of Nubank and Mercado Libre asking for a banking license, and a little bit concerned that maybe what could have happened in Brazil, or what happened in Brazil, could happen in Mexico. I'm less concerned about that now at these levels of valuations, but I do think when you buy a bank in a market like Mexico, you're doing two things. You're buying the bank, right? You're buying a piece of that business, but I think you're also buying a macro narrative, right? And I still don't think we're there yet, but I would certainly add a bank. I would probably, if Liberation Day ends up being, nothing too significant that sort of changes the course of things, I would probably not have Fibra Uno, and I would probably have Vesta in the portfolio as sort of a play on nearshoring, but a play on nearshoring growth, right? Because you could argue that a lot of these Fibras are plays on nearshoring, but those are more sort of stabilized portfolios. Vesta actually sort of requires growth for that story to play out. I would probably have, one of these sort of mid caps that have underperformed significantly, look very cheap, a stock like Traxion, probably. I think those would be sort of the types of names that I would have in the portfolio if I wanted to be more bullish.
All right. So you've been covering Mexican stocks for 30 years. What have you learned? What if some new analyst joined and said, what are your sort of top tips for getting Mexico right? What things, can you get wrong? Buffett often talks about, buying great companies at kind of reasonable prices rather than reasonable companies at cheap prices as a sort of investment philosophy. Do you have maybe the same or similar type of rules of thumb that have helped you navigate the ups and downs and slings and arrows of Mexico?
That's a good question. It's funny because now when I say I've been covering stocks and Mexican stocks for 31 years, I don't know whether it's a source of pride or embarrassment, right? I have mixed feelings about it, to be honest. So when you say it, I have mixed feelings hearing it as well. So it's interesting because I haven't always been a strategist, right? I mean, I've covered stocks for 31 years, but not been a strategist. I've been a strategist for, I guess it's 13 years now, 12 years. One thing I would say is that I think I've become a much better stock analyst once I became a strategist. And I think I'm a better strategist for being a stock analyst as well, right? Because I think sometimes when you cover stocks, in particular, if you focus on a particular sector, I think you become an expert at that, but you sort of suffer from the potential of developing tunnel vision, right? And I think that if you only do strategy, I think that you you're much less likely to have conviction on your stock calls, right? So I think sort of doing both, I think it's a good balance. And I think Mexico is a market that sort of affords you the ability to do that because it's not a very deep market. It's not a very big market. And so it's difficult to be ultra specialized, I think, right? And so that gives you, I think, the flexibility and the bandwidth to be able to do both. I think I wouldn't say necessarily that I have rules of thumb. I think that clearly I think you want to sort of you have to think of stocks as businesses that you would like to own or not own, right? Sort of how would I feel being a partner of that business? I think one thing that I've learned, I covered, even though I've looked at different sectors at different times and I do strategy as well, one sector that I've looked at throughout those 31 years is construction. The vast majority of the companies that I covered at that point no longer exist, right? So to me, one very big lesson is that companies don't go bust in Excel models, right? The models are useful, but they're not, they help you get a sense of where a business might go, what the drivers are, and more or less what the valuation is, but they're not good at predicting the future in many ways, right? And I think that that's one thing is don't be over-reliant on what your Excel model tells you. And one thing actually that I learned from you, actually I remember, and this was during, remember the whole Alfa and Ilsa episode where Alfa was trading at an incredibly distressed valuation because the steel cycle, it was incredibly depressed, and the Ilsa was sort of in trouble financially, and most people assumed that Alfa would have to put money into Ilsa and that would be value destructive and bad for shareholders. And all of a sudden the cycle turned, right? And they were able to sell Ilsa, for, not only was it not negative, but I think it was $2 or $3 billion. And I remember you telling me what we as analysts always sort of very often fail to understand or appreciate is the value of optionality, right? I think sort of understanding that there's an intrinsic value to that optionality that you don't capture in an Excel model, I think is sort of very important to understand as well. So I didn't really give you any rules of thumb there, but I think more than anything, it's just don't be, rely on common sense. Excel is helpful, sort of these valuation metrics are helpful, but it has its limits, it has its limitations.
What about the ownership, the family or the guys that are running? Is that also something you would advise looking into it carefully?
Of course. I mean, I think it's important. I mean, I guess it's become less fashionable now, but for years we spoke about, as analysts, we would speak a lot about ESG, right? ESG being sort of incredibly important, and it is. I sometimes think that or during the period of time where people were spending a lot of time on ESG, we probably spent not enough time on the G and too much time on the E, right? I think the G is incredibly important. Incentives are incredibly important. It wasn't Buffett, but it was his partner who said, you tell me the incentives and I'll tell you the outcome, right? And that I think is very important as well. I also think, though, it's important not to get too close to the companies sometimes and to the managements as well. I mean, I actually, I've over my career sort of felt that some of my best calls are with companies that I speak to the least, because I think it's important to be objective. And sometimes when you run the risk when you get very close to the companies, you become emotionally attached to it in a way, right? And that maybe sort of reduces your level of objectivity, right?
Right.
But I think, yeah, certainly, I mean, governance is critical.
But I mean, you've been here covering the Mexican stocks for 3 years, like you said. What is it that the Mexican market is not as deep as we think it should be for an economy of Mexico's size? I know this is the question that everybody has asked for tens of years. And do you have any idea, any thoughts on that?
I'll answer your question, but before I answer it directly, and I think it's interesting because this is obviously a question that comes up all the time.
All the time.
As Mexicans, we tend to think that all these things are just Mexico problems, right? And the funny thing is when you travel around the world, you hear the exact same complaint. I was in London in December, and it was interesting because it was the first time one would have thought that there'd be limited interest to speak to a Mexico specialist, December 2024, after the 5 months following the Mexican election in June. And I thought what was really interesting was it was the first time in my 31 years of doing this that I actually spent a full week in London, seeing 25 investors or 30 investors almost over the course of a week. I mean, from marketing, from when you were an analyst, that you'd spend a couple of days in London, when in Edinburgh, you'd sort of move around. The reason I mentioned that is that as a result of that, I was able to sort of actually wake up in the morning and have a cup of coffee and watch TV while I got dressed. And I was watching Bloomberg TV. And it was funny because, on Monday, it was somebody speaking about the UK markets and sort of saying that, I think the FTSE is going to disappear in 10 years because all these companies are delisting from the UK to list in the US and we have no depth. And then the next day, a French analyst was complaining about, the same thing in Paris. And if you go to Colombia, it's obviously the same situation. If you go to Peru, it's the same. So one thing I'd say is this is not a Mexican phenomenon. And, similar to the way that we started this conversation saying that maybe Mexico's outperformance today maybe has more to do with the U.S.'s underperformance. I think this, to a large degree, is less a Mexico issue than it is a U.S. issue. The U.S. is just attracting, sucking capital from everywhere, right? Not just Mexico. So I'd start off with that, which is to say, I think it's a global issue, and I think it has more to do with the U.S. than with Mexico. Now, I also think there are Mexico-specific issues that contribute to it as well, right? I think, I mentioned earlier that if you look at Mexico Inc., it's maybe the top decile or quartile of companies. These companies are incredibly profitable, right? Look at the returns that they generate. They're consistently, for the most part, you would assume that the spread over WACC that a lot of these companies generate, you would assume that over time would attract new entrants, and it really hasn't. And the reason I bring that up is that reduces companies' need for capital, right? Because they're generating sufficient resources from their own businesses to pay themselves nice dividends and to continue to grow the business as well. I think part of it too is, we'll see if this continues to be the case after Liberation Day, right? But Mexico, obviously, since the restructuring of the economy in the late 80s and certainly since NAFTA, sort of has been open to the world, right? It's a very open economy. And so I think that a lot of companies, rather than thinking of the equity market as a way to either monetize their businesses or to tap into for growth, they just sell to foreign companies, right? They sell to U.S. companies. And then to that, I would add, Mexico, I think if there's one lesson that I've learned over the last 3 years is that Mexico really never misses a chance to miss an opportunity, right? I think Mexico is extraordinary at snatching the feet from the jaws of victory. And so I think part of it is that we have every 6, 7, 8 years, we have these sort of episodes where you have this severe crisis of confidence. And that I think prompts companies to invest elsewhere and not to really to sort of see Mexican capital markets as a partnership, let's say a long-term partnership, and as a source of future growth capital.
BTG Pactual is a giant, obviously in Brazil, huge in relative terms in Chile, big in Colombia, Peru, but in Mexico it's quite small. Why is that the case? Are you going to do anything about it? If there's ever a time to buy something in Mexico, it might be now. Banks, trading at single-digit PEs.
Yes, I mean, you're right. I think obviously the same sort of uncertainty that we were discussing earlier that sort of plagues the investment environment and I think explains the low levels of valuation in Mexico. That same uncertainty features into management decisions and it makes sort of committing capital to a place like Mexico right now, you need to think about it more carefully. I would also say, different from a lot of the markets outside of Brazil and South America where we're bigger relative to the size of a market than we are in Mexico, I would say that the competitive landscape is a little bit different. And I think in Mexico, within Latin America, it's clearly the market that has the biggest presence of U.S. banks. They've been here for a while. They've been here longer than we have, some larger than others, but, Mexico, I guess you could argue, from an investment banking standpoint, it's a pretty well-served market, right? And we would be competing with people who, do have a lower cost of capital than we do, and that makes it a little bit more difficult, being domiciled in Brazil. Having said all that, we've had this office. I think we opened it in 2013. It's grown now to, I'd say sort of slightly shy of 50 people. We're not involved in every business, but we're involved in various businesses. Obviously, we have equity research people in Mexico. We've got sales and trading of equities and fixed income. We have investment banking. And I would say that despite the fact that we're smaller than many of our competitors, I think we've managed to produce a profitable business, right? And if you look at our market share in investment banking, we've done well. We've been involved in a lot of the more recent transactions. If you look at our performance in sales and trading, we're consistently, in the top 10, moving towards the top 5. And that's really all with client flow, right? We don't really sort of trade prop at BTG in Mexico. So I would say the question of whether or not to commit more capital to Mexico, I think, is one that comes up often. It's one that our management thinks about constantly. I think some of these slip-ups that Mexico has had over the years explain maybe why we haven't done that yet. I wouldn't rule it out. But you're right. If ever there was a time to take the long view and maybe commit capital to Mexico, it's probably moments like this.
Great. Well, Gordon, that was super interesting.
Thank you, Gordon.
Thank you very much.
Thank you for the invitation.
Talk to you.
So thank you, everyone, for joining Mex Moves. Hope to catch you next week. And in the meantime, you're strongly encouraged to subscribe to the channel.
Please do, and don't forget to ring the bell so that you get notifications when the next podcast comes out. Thank you, everyone. Thank you, Damian.